So Bitcoin was 52,000 early this week, and it's now 62. So what's your take on that?
I think I'm going to shy away from saying the trend is institutionalization, because we've been saying that on these panels for a long time. But I think we might be here now. I'm not sure. It feels a lot better now this year, since January. The ETF side, of course, us being an institutional trading desk, we do face off against institutions, and we also have our DGen component as well that faces off into the Token Foundation contingent. But on the institutional side, the ETF piece is what everyone is talking about, specifically on net inflows. Everyone's reading the same articles and getting the same Telegram group updates, I'm sure. But that is essentially what's driving the trend for us right now. And we're the first 60 plus days into the year, and it has been the topic of conversation. Obviously, as the end of last year sort of rolled into the new year here, we are still carrying forward some of those other narratives, such as AI, DPIN, GameFi, all the other things that we may talk about here today. But
there's a lot to unpack there.
All right, no, not for myself. But on the ETF side, it is definitely something that we could dig a little bit deeper into. And my desk has quite a bit of insight on authorized participants, liquidity providers that are providing that liquidity into those ETF sources, and from a market making standpoint.
Very interesting. And Paul, you came all the way from Dubai. What are you seeing in that part of the world?
Well, Dubai is quite active in this space, as you can imagine. But what's representative of Dubai is the fact that it's part of the growth markets. And one thing that we have been seeing in the growth markets is there is a great deal of appetite from non-Web3 stakeholders to get involved with the blockchain technology. And one of the themes that we have been exploring and working very closely with our clients is the real-world asset tokenization on a government level as a means for foreign direct investment. So we have been recently receiving a lot of inquiries in this space. We have seen there is a great deal of appetite to test and discover opportunities in this space.
Very interesting. Yuen, I'll come to you in a short while, but I'm interested in Joe's take on tokenization. So Joe, you've been in real estate for, I think, more than 10 years, and now you are co-founder of CitaDAO. So can you tell us a little bit more, what do you see as the next trend in this space?
Yeah, so we think that tokenization will be the next trend in 2024, and with increasing regulatory clarity in the space, we have already seen success in tokenizing of the most liquid asset, the US dollar, transitioning to tokenization of US Treasury, with the likes of Ondo Finance recording all-time high TVL. We believe that as interest rates start coming down, hopefully, over the next couple of years, real estate will start picking up, and that's where we believe tokenization of real estate will come next.
Maybe we revisit that topic when the time comes in a few years' time.
Yeah, definitely.
And Yuen, so you're from Hong Kong. Can you tell us a little bit more, like what do you see as a trend in this space?
You mean this year's trend?
The trend for digital assets?
What's your take for this year? I think basically, obviously, we know that the market is really hot right now in the even the primary investment. So we see a lot of narrative that people are going to focus on. So this year we are hearing a lot on RWA, but I think it's not the highest peak yet. But I think RWA is like a more improved narrative on the old STO. And we'll all remember that, those are the years that people always talk about STO. But I think RWA is a more comprehensive and more encompassing name for that. So we also see that, a lot of such example like on GameFi, right? And now usually on games we call it Web3 gaming, right? So for sure, the institutions are coming in, right? And I think the recent Bitcoin run is because of this institution coming in, right? So I think right now is really the time to focus on such projects and all this, yeah. So hopefully we can get a lot of support from all you guys here to make it work.
Thank you, Yuen. So I see a common trend here that there's a lot of emphasis on tokenization, institutional ETFs as well, maybe GameFi and AI. Let's not ignore AI. Everyone is talking about it. So I'll skip you, Karim. Don't worry. Joe, in terms of tokenization, can you provide a little bit more flavor to what tokenization is about? Why do you see it as a trend, and how this might evolve this year?
Yeah, thank you. So the way I see tokenization as a concept is actually not new. It has been around for the longest time, at least a decade. And the most successful asset that has been tokenized today is actually the US dollar. So that has led to a new category of coins in the space known as stable coins that have seen increasing attention from both the regulators as well as the governments and the banks globally. In fact, something interesting that I see happening is how banks themselves are looking at issuing tokenized liabilities, which effectively could lead to the likes of your JP Morgan coin, which is a stable coin too, that then increase liquidity from the TradFi space into the crypto space. With increasing liquidity, we can see magic happens. We already see what ETFs have done to the space. How just a simple approval of Bitcoin ETF have led to huge volumes of TradFi capital moving straight through the institutional space into the ETF, into the crypto space, which have lifted the markets as we see today. We believe that as more bridges between TradFi and crypto is built, the likes of other assets, such as real estate, will start becoming a net beneficiary in terms of getting more assets on chain, because obviously assets on chain transact with lower friction, lower costs than off chain, and more efficiently. So we believe that as more and more assets come on chain, that might be the future of like real estate.
Thank you, Joe. And Paul, you are quite an expert in this area. Do you have anything to add?
Sorry, can you come again?
Anything to add on the topic of tokenization?
Yes. So one thing that I would also like to loop in when it comes to tokenization is the opportunity to think outside of the assets. And my kind of journey into the Web3 space was through tokenization of the work and innovation. So I've spent...
Indonesia.
I'm sorry?
Was it Indonesia?
No, that was the development of the synthetic equity. So essentially, as a management consultant, I've seen that, as most of you can imagine, 90% of the problems in any enterprise stem from people. Technology, money, it's manageable. But it's people that really require the push in the right direction, and that's driven by the culture, making sure people do the right thing when nobody's watching. And more often than not, it really comes down to what's in it for me. As more and more organizations realize that incentives are the key driver for the breakthrough performance, that's where the interest professionally was kind of like leading us as a consultancy. So as long story short, what we have developed over the past year and a half, synthetic equity, is intra-company currency.
Sorry, I'm going to stop you there. What is synthetic equity for the benefits of...
So synthetic equity is essentially intra-company currency built on the phantom shares model. So rather than to dilute the equity of the organization, you can connect your performance targets to this intra-company currency in order to ensure the best performance of your employees, stakeholders, as well as suppliers. So essentially, it's a very transparent way to build an incentives plan that is essentially a deferred cash payment that is driven by performance.
Wow, that's very abstract, but
deep, very
deep. We'll need another
It's
session for
super
that.
simple. It's a super simple model. This is a methodology that has been time tested and proven for the past 50 years, and it has been exclusive to critical jobs and executive leadership. So what we have managed to achieve by using blockchain is to introduce transparency, but most importantly, the robustness of the system that is driving the inclusiveness. So now you can incentivize the same way your CEO is incentivized, a cab driver or, a shop floor cleaner. So everybody benefits from the overall performance of the organization.
How long do you think it will take for us to get there?
So these kind of solutions have been already around for many decades, but they're run and operated on Excel, and they're black boxed by the HR. So that's the problem that we're kind of solving by putting it on the app and using blockchain as a technology of choice to expand the capabilities of this platform.
Thank you, Paul. So Karim, you are the expert here in terms of regulations, advisory. Like how would you add that piece into tokenization?
So first of all, to follow up really briefly on what Paul mentioned, there are a few companies in Singapore that do this as well, already on blockchain as well, and that incentivize their staff using a synthetic token, essentially, that's tied to company performance. So it's a thing, it exists, and it's a very popular model as well, so kudos for setting that up. On the regulatory front, I guess the biggest issue we saw last year with the SEC was that everything's apparently a security now, no matter what it is. I mean, the stable coin could be a security at this point. Where regulation is trending, I guess, this year is very much on, especially not in the US, but in Singapore, in the Middle East, everywhere else, is how do you define the safe space to operate without stifling growth? Right, and be this on the tokenization front of things or just on the blockchain infrastructure, quite simply. Like, is a miles program for Chris Flyer on blockchain, is that a security, yes or no? What are the definitions of what has to be regulated and how? And we do have to keep in mind that regulators are not here to prohibit us from doing things and playing in the sandbox. They're here to protect the end user. And some countries do that a bit better than others. We're very grateful to the MAS. We're very grateful for the GCC countries who got a bit more of a proactive and forward-thinking approach. But there are also smaller countries with a very forward-thinking financial infrastructure in the first place, right? So making smaller changes is a very controlled space. Where we're going from now on as well, I mean, the infrastructure overhaul is in place. We're waiting for new products to come out. There's a lot of incentivization from central banks for big participants to play and to build. And we're going to see a lot more of that, I'm thinking, this year, to be entirely honest. Ravi Menon mentioned at the SFF last year that we're getting wholesale CBDCs in Singapore this year. So not retail CBDCs, so you can all still sleep easy, but wholesale CBDCs. So how do banks interact with other banks and with other larger financial institutions? What that means for the end user, for all of us mortals here, is probably not that much, to be entirely honest. The cost of transactions is going to go down for interbank transfers, but as an end user, will your bank will they transfer that cost saving to you? Probably not. I mean, fast transfers cost as much as SWIFT transactions did, and doesn't make a big difference for us. That comes out of your bank account fees. But I guess we'll all live in a faster, more decentralized future soon enough.
Got it, thanks. And Yuen, what's your input then around tokenization?
I think, of course, tokenization is just a way of, I'll put it as a digitization, right? It's how to make everything more efficient. So I think now the challenge for tokenization, be it RWA and what have you, right, is how to bridge Web 2 into Web 3 and give it a lot of more efficiencies out of it and all this, right? So, and how to make it more interesting. So I think that's always the challenge. Like when I look back the STO days, right, when people want to tokenize real estate and all this, but how to make the secondary market more liquid, right? That's the challenge, because even on most ST exchanges, they themselves don't have the liquidity, right? So how to make the secondary market more liquid, more efficient, I think that's the biggest challenge on either what you call it, STO or RWA. So we have been thinking on a lot of innovative solutions to address this, right? And that's why we want to bring out the liquidity on hotel rooms and make it like more efficient through membership subscription, what have you, the travel club, founder passes and all this. And we are also going to introduce a travel to earn incentive, to make it more fun, more efficient. And I think the next way to make tokenization more possible on real estate and all this is through the way of DeFi, right? Yeah, so that there's a lot of way to return the benefits through a decentralized way, like through staking and all this, through distribution to the pools and all this, yeah. So there's certainly a lot of innovation that's currently underway, yeah. Thanks.
Thank you, Yuen.
Sorry,
Right.
can I jump in? I actually
Yes,
had a question. Sorry, swap roles here. 5 years ago, we heard of the first building being tokenized. I think it was in Brooklyn, actually, and it was like fractionalized. It was done through consensus and through like AirSwap, decentralized exchanges. I'm curious, why do we think it's gonna? Why is it coming back now? This might be a question for Joel. Sorry, Kristen.
Go for it.
Yeah.
Yeah, so tokenization of real estate, the first one is actually, at least where I know, is the Aspen Heights hotels. So basically they tokenize that hotel, and then they a fraction of that, and then subsequently converted to membership and stuff. The idea behind tokenization then was capital raising, but the problem with tokenization all along, especially in real estate, is that there's no secondary liquidity. So because of the lack of secondary liquidity, it begs the questions, how is tokenization better than the GPLP investment structure used by real estate investment professionals around the world? And there was none until the emergence of DeFi innovations. So with DeFi, the concept of automated market maker liquidity pool comes around to then allow the real estate token holders to provide liquidity for other real estate token holders in the secondary market. The key is to how to incentivize those liquidity. That's something that is still work in process. But with that innovation in place, now it solves one of the traditional problems that has plagued the tokenization industry for the longest time. So my answer to you is what changes is actually decentralized finance.
Okay, cool. Thank you.
And so Ryan, I have two questions for you. So one is around tokenization, but the other is also around ETFs and institutional interest in ETFs and tokenization. I'm sure you meet with a lot of clients in the space. So what are you seeing around ETFs and tokenization in terms of institutional interest?
Well, ETFs is top of mind, of course, and it's driving 90% of conversations, from the coffee break room to the crypto conference to the elevator at Goldman Sachs, I'm sure, which is a famous place where they supposedly discuss deals, the elevator. Or the lift, excuse me. So everything is top of mind as ETFs right now for our business. And again, like I said, we have a whole other DGen component where we do face off against token foundations and whatnot, mostly from market making services and from a product perspective as well. But everything is currently around just getting access, and that's all that's happening. And the reason why I kicked off my intro was around sort of being shy about talking about institutionalization is because we've sort of already gone down this path many years ago, and we keep doing it again and again after every conference or every bull and bear market. But again, I feel like this is really the game changer now, and that should be the clear path to more liquidity, transparency, getting those end users into this space, not just from a small scale through GameFi and all these other smaller means. Like, this is the large scale approach to actually growing our industry. And sure, it's only in Bitcoin currently, and we know that there are other potential avenues that will be added and other spot ETFs, although we've also sort of seen that there could be some blockers in place to limit it to Ethereum. But again, like our conversations on our trading desk, when it's not about altcoin trading, it is around where we see sort of these inflows, where are they actually going to? And they're going into the hands of the end user, of course. So for us, whether you're holding a small amount of crypto or a large amount, like your portfolios are being driven by those inflows and we don't see it stopping anytime soon. Pathways have been opened from a regulatory perspective, from a capital perspective, and now from a market access perspective. The only combative piece, of course, is the outflows, and we know where those come from. But that's also, we've also dominated them from an inflows perspective. Like, I don't see that stopping into the next, let's call it this cycle, into this year. I know everyone wants the cycle to be much longer than that, which I hope it is. But let's call it this calendar year. We expect to be having a lot of repetitive conversations around what is driving people's portfolio growth.
There's a certain irony, though. I mean, I know that we're all very happy that Bitcoin's on the way up and crypto's on the way up, which is also boosting growth in DeFi projects, right? But there's still a certain irony, I feel, that the one way that we came out of the crypto winter is by bringing DeFi onto TradFi, by creating a traditional financial product which buys Bitcoin and makes it accessible to the TradFi crowd.
Anyone? Is there a question?
It wasn't really a question, more like a...
I guess, so I'll take a step at this. So I guess one reason why is because for many fund managers, they have mandates on what kind of asset class they can invest in, and investing in a TradFi investment product is something that fits inside the mandate, even though the TradFi investment product invests in Bitcoin, that is not in the mandate, so it gives them access to Bitcoin indirectly.
Yeah, plus you don't need the entire infrastructure, you don't need a custody solution, you don't need to figure out how to store your own keys, so that makes it a lot more accessible. But I don't know if you saw this, but BlackRock's conservative portfolio has a 2% crypto allocation. Which
So is it right to say that this bull market, I guess we're in a bull market right now, is going to be largely driven by traditional finance or interest from traditional finance?
I mean, some of these ETFs are buying twice the amount of crypto or Bitcoin mined a day, right? So, and as long as they keep doing that, I think we're in the green.
Yeah, I think we just feel like it's just more sustainable this time around. And I know famous last words before it all collapses, but more sustainable for sure. We have real actors pushing in this space. We've all been through previous markets. We've all enjoyed the ups, not so much the downs, but our portfolios have been enhanced by, I don't know, DeFi summer, and then it was the next narrative, and then the next, and then it was meme coins, Telegram bots, Gamblify, well, whatever it was. I feel like this is just like the legitimate, sustainable action point now that we're all sort of thriving on. Again,
that's interesting.
Don't take my word for it, though.
Not financial advice.
Non-financial advice. So back in 2021, where the boom of bot apes, right, CryptoPunks, all the NFTs, and also GameFi as well, mostly play to earn GameFi. Like, do you guys see that trend coming back this year? I mean, what's your take on that? Anyone?
I mean, a quick note is just the increase in the legitimacy of DeFi, well, crypto right now will push the legitimacy of DeFi and other blockchain products. So it's to be expected that something's going to come out of this that's kind of like the CryptoPunks and NFTs. Can't really say what yet. Maybe you guys?
I think my opinion is that GameFi, or in other words, I think a better description is Web3 gaming. For sure, they are coming back, okay? Because from my personal experience, because I was a very degen investor in crypto projects. Yeah, I invested like 100 projects already in the past 2 or 3 years. So I used to think that, there was one stage I think that like money is just like a digital number, right? Until Luna and FTX crashes, right? And brought me to reality, right? But I do see that, the games right now are more established, right? They got the traction, user growth, and all this. But back in 2020 or 2021, some games are just pitch deck, PPT, race, right? Yeah. So we see how the industry has matured, right, in a certain way and evolved, right? And same thing, like I think on NFT and all this, I won't call them as useless because NFT is just a way of doing things, right? How you bring value to the NFTs is actually the real question, yeah. So I think, and also because I'm also doing my own token launch, to be honest, right? I can see the market heating up seriously, right? Now, if you talk to the launch pads and all this, it takes a longer time and all this. And I see, okay, to be honest, a lot of projects I invested when they got launched in last year, wow, it's always negative, 50% to negative 95% when they launch, right? But this year, finally, you get to see a few X's, right? So I'm quite sure that now is the bull market, the start of the bull market here.
So over the past 1 year, I see there's a lot of interest in AI. Like every country, every government, every VCs are investing to AI. So how do you see AI play a part in driving the adoption of, like, say, Web3, blockchain, or digital assets? How can AI be an enabler for this industry?
I can do a quick one on this. The data governance piece around AI, where does the training data, or where is the training data that trains your AI stored, and who does it belong to? For a purely open source, or at least an AI of the people, or a ChatGPT of the people, the files and the data that trains your AI and also interacts with your AI should also be decentralized, which gives a very big value or use case, I would say, for decentralized filing systems, which should be on blockchain.
Paul?
Well, I'm kind of not a big fan of AI. There is a really great book, The World After Google, that talks about, quite a bit about artificial intelligence. I'm a much bigger proponent of infrastructure technology like a blockchain. And ultimately, I think it's really going to come down to infrastructure rather than a content. So if you look at the world and the way it's evolving right now, in any scenario where you are building a strategic forecast, only a few years back, you would have one or two black swans. Now you have a whole farm of black swans. So I think that kind of, uncertainty that future will bring is really going to have us focus on infrastructure as one of the key bets. So I think the infrastructure will have the impact on the future much more than a content.
I'll say one quick thing. From a trading perspective, obviously like signal generation and whatnot, AI is a massive component for that. But I know we're finished on time. Over-reliance on AI is probably going to be one of the biggest drawbacks. And obviously that it will evolve and enhance itself and make its way through the progressions. But if you're talking from a trading perspective, which is one of the most applicable things that I enjoy about it, signal generation, but I also am very conscious about the drawbacks within over-reliance on it because it is not infallible. We've all used OpenAI or ChatGPT or DALL-E or Sora now, and you're like, wow, that's wrong. Like, it's just not accurate. So that's dangerous when you're dealing with large sums of money and deploying it into markets. So that's what matters to me.
So last question I have before we open up to the floor. Non-financial advice. If you have $100,000, where would you put your investment into this year?
I can't answer this question, I'm sorry.
So if I have $100,000, well, at least looking at how the ETFs are pushing out the market, I'll probably put into Ethereum. Hopefully, the Ethereum ETF will go through next.
I think the simple answer is the Bitcoin ETF. I would probably deploy it into venture, which I would probably see it go near zero through the next bear market, but then it would 50x in 3 years. That's what I would do with it.
I would have to concur with Ryan. I think that's the way to go.
Ambitious.
Yeah, personally, I'll put into gaming. I'll put into RWA. Maybe the next wave, SocialFi. For me, I'm a very degen investor. I have to clarify. That's why I think I wouldn't put much into Bitcoin because there's only so much Bitcoin can grow. But I think this will be the biggest ever bull market that we will ever see. Yeah. So that's why I think it's better to go for primary investment and all this. Yeah. That's just my take. Sorry. And FA, yeah.
Thank you, Yuen. Thank you, Yuen. It's non-financial advice, but I guess we have to follow where the money goes. So if you guys are going to put your money on that, I guess these are probably the biggest trend that we can anticipate for this year. So thank you so much for our panelists today. We run out of time, but thank you.
Thank you.
Thank you.
Thank you.
Okay, good afternoon, everybody. Once again, welcome to Blockchain Festival Asia 24. How's everybody? As I say, how's everybody? This guy is here yawning already. All right, so let's start off with our next topic of the day. It's called Fireside Chat, Gaming for Good, Harnessing Tokenization and Digital Ownership in Web 3.0 for Social Inclusion and Community Upliftment. So without further ado, let's welcome first our moderator, Ida Mok, Chief Legal Officer of W3GG and President of Women in Blockchain Asia. And of course, next, our speaker, Irene Umar, CEO of W3 Guild Games. So let's give a big round of applause to these lovely ladies, everyone. Come everyone, let's give a big round of applause to these lovely ladies.